So boys, one thing that changed my trading forever. Zooming in, like really zooming in into the daily candles. This is the daily chart right now. If we just zoom in a bit more, you see the trend line top, that's on. If we zoom out, but you know, you've got to zoom out, see where everything's going, mark up, and then keep zooming in, and then keep zooming in, and keep zooming in. We see the daily. The daily bounced off that trend line. Left an order block there. Broke structure, and where did it go? Took high liquid. Like, if you were just trading here, down here, you see price sweeps lows there. If I mark that out, lows swept out, leaves a bullish order block. When you zoom in, also gets a third trend line top. This is all just zooming in from the daily. We go into a bit of a range, and you see this candle like here, when we wick out in this bullish imbalance, this bullish imbalance gets taken, doesn't it? If you mark that out, the closer you move, you look on the higher time frame, the more you see everything happens for a reason, bro. And price is just trading from imbalance to imbalance, liquidity to liquidity. We jump out of the range and tap into this order block created. Where does price go? It pushes straight through the imbalancing. It doesn't just sweep, but it purges liquidity. So that's also a breaker block left there. Price inverse the imbalance, just purged through it, leaving the imbalance behind. But it's in the exact same place. And we just keep pushing high. You can see this is a bullish imbalance, or bullish or a bearish order block. I mean, price. This candle wicks out, closes low, and then what's happening here? Get the third candle, the 3 candle tap, accumulation, manipulation, distribution. But really, when you look at it properly, it really is just a daily retracement, and we could easily see the next couple of days into next week taking out that buy side liquidity, because we're also in a discount for banks to buy on our equilibrium. So now we know we've got our higher time frame bias. We know what we're looking for, so we're not going to be shorting. We're only going to be buying. That's high probability right now. So what do we want to do? We want to look for those buys, let price finish off the daily as the retrace, and then we're just hunting for that buy. Because when we do get in for that buy, say it's tomorrow, and we could be holding this till next week. So just entering on the equilibrium. Where's my mouse right now? Let's see, we enter in there. That's already 46 pips. Just targeting. Sorry. Just targeting these highs. This is key liquidity here. A high. That's 100 pips right there. If price does what I say, retraces properly, and then starts pushing heavily to the upside, we can catch that 100 pips. There's also TP's higher than this. Extend TP. 200 pips. And can you see, so our range here, 100 pips. From this key area to this key area is another 100 pips. Clean 100 pips. We could easily see that get ran through in a few days, just like it did the other week when I caught those pips. Like, you've got to zoom out, man. We had high time. Okay, so we might have had a small time frame break of structure, but what are we doing? We're just retracing on the higher time frames. Follow that higher time frame bias, man. As soon as I started doing that, following higher time frame bias properly, that's when my trading started changing. You see that? Look how the trend's running. It's so clear.